There's a shift happening right now in the GTA housing market, and most people won't recognize it until it's possibly already past them. You see, prices haven't crashed, but sellers are chasing buyers downward. Inventory's building, and every week we're seeing more people cut the price just to get out. Now, if you're planning to sell in the next 6 months, this video might be the most important one you watch because waiting could cost you. Now, we've had multiple rate cuts this year, and to be honest, they've done very little to spark demand. The problem isn't interest rates anymore, it's confidence. Most households simply don't believe prices will rise in the short term. So when buyers step in today, they're not chasing homes, they're cherry picking value. Buyers didn't suddenly come rushing back because mortgage rates dropped a quarter point. They came back this last month because they're seeing a little bit more opportunity. They're seeing more listings, better selection, and some of them are saying, let's see if we can find a great deal. That's what's really driving the activity right now. Selection, not speculation. But don't mistake what I'm about to tell you for a market recovery, because yes, in September, buyers were transacting, but they're cautious, they're analytical, and they're still negotiating very hard. Now, yes, if you haven't heard in the news, September sales were up about 8.5% from last year, but the context matters. So sales are up from a very low base. We're comparing to one of the slowest falls in years, so while it feels like momentum, it's really just normalization. The average price across the GTA is sitting just over 1.05 million, roughly 5% below last year. But here's what the averages hide. We are seeing deep price cuts in certain price pockets, especially on homes that have sat for more than 30 days. I've seen listings in Durham and Peel drop $50,000 to $100,000 just to generate showings. So what's happening is sellers, they are anchoring to last year's prices, and they're realizing that buyers simply won't meet them there. They're chasing the market down instead of getting ahead of it. And here's the truth. In this environment, every price cut sets a new comparable. So when one seller drops 2 to 5% to move their home, it quietly resets the bar for the whole street. Now, what do you think about where the market is headed? I would love to hear it in the comments. Now, getting back to the stats, detached homes are still leading in volume. So there were 2,600 sold last month, but they were sold at lower prices. Townhomes and semis are holding a little bit firmer because they're an alternative for stretched buyers. Condos, though, are the softest part of the market. So the average sits around $655,000. We're seeing both investors and owners list their properties, some because they're negative cash flow, others because they're upgrading into freeholds while they still can. Some people just speculating that the market's going to continue to correct with the condos and they're just cutting their losses. You know, I told you a week ago, new construction in the GTA is at a standstill. So buildings are being canceled. The sales volume is at historic lows. And a lot of the developers are just telling me that they can't build, they're not profitable where the market value is trending right now. So they're just simply not going to build. Now, when we talk about inventory, right, we've got roughly 19,000 listings in the market, up 4% from last year, while sales remain under 6,000 last month. So 6,000 sales was pretty healthy, but it's not going to be too impactful at this point. There is still a lot of supply, and the outskirts of the Greater Toronto area still very slow moving. So this gives us a sales to new listings ratio around 29%, which is clearly a buyer's market. So for buyers, right, you can take your time, you can shop, you can actually negotiate deals in your favor. We had a family recently get a big 4-bedroom ravine home, right, last week. We've got condo buyers getting lost for very good value. But you want to just remember, falling prices, they don't automatically equal opportunity. So you need to still buy the right property, not just the cheapest. So you want to focus on properties with the solid fundamentals. So location, layout, and resale appeal. So when the market does turn again, and it will eventually, we don't know when, but those are the types of properties that recover first. So right now, I genuinely believe the next 6 months could bring more price erosion, not because of panic necessarily, but because of competition. So every week that passes, we are seeing sellers cut prices to meet the market. And in doing so, they reset the comps lower for everyone else. So if you know you need to sell in the next 6 months, I would advise you to do it from a position of control, not desperation. So kind of get out ahead of it. The longer you wait, the more you're going to be chasing buyers downward potentially, right? So across the GTA, there's a clear pattern. So in Durham, you've got the most affordable region. It is seeing a lot of buyer activity, but you're also experiencing extremely sharp discounts. That's normal as the region tends to post the biggest gains when the market is heating up. So it's a very volatile area compared to other regions. When we're talking about Toronto, especially condos, it remains very oversupplied. We're seeing assignment sales flood the market. People don't want to close. And it's pulling the resale values down as well. Toronto homes still command good sold prices, yet it is a slower process. York region, you're seeing higher end markets like Vaughan and Richmond Hill. It's slower, longer days on market, and bigger negotiation gaps at times. In the Peel region, it is fairly balanced, but it's trending much softer. So it's not just one GTA market all across. We've got 5 mini markets all adjusting at different speeds, but in the same direction. So we're still in the middle of a correction, and I don't think we're at the end of it. Multiple rate cuts haven't been enough to offset high prices and affordability. Inventory is climbing faster than sales. This isn't a collapse. It's the market continuing to try to find an equilibrium after years of, overvaluation. Let's talk about something that maybe isn't showing up in the graphs, but you can feel it when you talk to homeowners though, is that a lot of listings coming on right now, they aren't people moving up. They're actually people trying to get out before renewals. So I'm hearing from, sellers whose mortgages they're rolling over from like a 2% that they got to like now a 4.25%, right? And so those are the quiet pressures that are keeping inventory building. And they're why I think the softness continues through winter. Now, let's also talk about something that's become much more noticeable over the last few months. It's bank sales. Bank sales are rising, and I'm seeing lots of them on the market. I've been in the industry for 15 years, and I've never seen it at this level. The key to understand is that, these listings, they don't flood the market overnight, they trickle in, but every time that they do, and the bank's in control, they sometimes can set new comparables, right? Because when a bank sells a home under market value, just to recover what's owed, that sale becomes the benchmark for the street. And that's how downward momentum builds quietly. And again, I'm not saying the market is in a panic, but we are experiencing a lagging symptom of a market still correcting, right? So it's a reminder that if you do need to sell, you want to control the timeline before the timeline controls you, or even worse, you lose control altogether. But heading into the winter, expect softer numbers. The data from Treb shows new listings are still outpacing sales, along with consumer confidence is low, right? And that imbalance is keeping prices under pressure. Unless there's a major economic shift, the next few months will likely bring more of the same, right? Modest sales activity, flat or mild price declines, and sharper discounts for sellers who wait too long, right? So this isn't necessarily a crash, it's just a minor pullback. It's kind of like the in-between. The GTA market is active, but it's very soft. And every correction creates hesitation. Buyers wait for the bottom, sellers wait for the top to appear. Most end up missing both. The truth is, timing perfectly never happens, right? The people who win are the ones who make informed moves while everyone else waits. If you would like clarity on what it means for maybe your home, your neighborhood, or your situation, and how to maybe price strategically in this kind of market, you can always reach out to me and book a call directly with me myself. I'm happy to walk through your situation and go over the data with you. Until next time, I appreciate you watching and hit that subscribe button if you haven't already. Take care.